So in our previous example or in the previous class, we have discussed about how does in general like any business works out, right? So we'll take as we consider it as a, like in case if you wanted to start any supermarkets, right? So this is a basic account that the transactions that you will come across, and in case if you want to record, this is how we record. But this is not the proper way of recording the transactions. So it will not help you to calculate the profit. There are certain accounting principles and accounting methods, or like we can say accounting rules are there. Like accordingly, if you try to record those transactions, so that it will help you to identify the transactions, and like whether it has to be considered as an expense or it is a loss or anything. Then only you will it will be easy for us to evaluate, I mean, ascertain whether we are making profits or loss, right? So accordingly, so to make it simple, see these, the names of all each and every transaction is very clear, that you know how much you have invested, building for rent. This is a manual calculation where we will just add the expenses. Sorry, we'll remove the expenses. We'll add the profit and sales, everything. But rather than following this method of accounting, which is not as per the methods or something, which is not as per the it's an unorganized way of recording the transaction. So let's make it organized, and so we will follow some golden accounting. We will call it as a golden rules of accounting. So before I get into this golden rules of accounting, right? So see, in simple, if you are in any business, right? So we have like these kind of transactions. So let's say, for example, the first day, let's is on Jan second, we have started business, right? So let's say you have you wanted to record the transactions. Like what is the first transaction that we have done is introduced the capital, right? So capital, that is worth of 10 lakhs. So this is how you will write the transactions. And the second one is paid rent for building. For Jan, it's around 50,000, or like including the advance everything. Or if you want to make it only rent, we'll make it as a 5,000 as a rent, right? So this is how you will keep on writing the transactions. So here we have just used only one word, or like building for rent. But in case if there is a transaction, if you want to elaborate for what reason and for which month, so these are you can write it. And this is in general, like there are a lot of such transactions that keeps on happening on daily basis, right? And if you want to record, first you should identify what is happening in with respect to the with respect to the cash. So obviously in any business, any transaction that you do, any expense that you incur, any income that you make, that is connected with, indirectly or directly, it is connected with the consideration, right? When I say consideration, in exchange of doing any business, you will either do payment or you will receive the payment. That is in terms of cash. Or cash doesn't mean literally cash. It can be either uh, bank account transfer, check amount, anything in terms of cash or bank account, right? So first we should see what is happening. And always, as if you remember, like initially we have discussed, right? In business we will consider this as a separate legal entity. It is always considered as a separate legal entity. It has nothing to do with the person who has started this business. So it is complete. Let's say if you are maintaining a separate books, we are supposed to maintain a separate books of accounts only in the name of supermarket, right? So what happened in the first transaction, that is introduced capital. What do you mean by introduced capital? We have uh, transferred 10 lakh or 1 lakh, right? We have transferred 1 lakh to the bank account, to the business bank account. That means we are receiving the cash, right? In our books of accounts, we are receiving the cash. That means we need to see what is happening. with the cash. We are receiving the cash, but against what is it? It is a liability. Why did I say liabilities? Because this is something which we are supposed to return it back to someone who has lent it to us. Someone means it might be bank or it might be the owner. Even if you're the owner of the company, you should take this 1 lakh from out of your business, right? So that's the reason always keep in mind what is happening with the cash. So we will see how to record this one. But if you see the next example, that is a paid rent for building, right? So here for your business, you're incurring some expense in the form of rent. But how will you record that one? If you want to record the transaction, first you should know what is happening with the cash. So what is happening here with the cash? It is going out of the business, right? That is from your bank account, you are paying 5,000 to the landlord. So that means 5,000 rupees is something which is going to deduct, is going to reduce from your from your bank account. It is going, so even this is also connected with the cash. So in our first transaction, our bank account is going to increase, and here our bank account is going to reduce. So whenever there is an increase and decrease, so we have to record in such a way that cash is going out. And let's say we have purchased stock, groceries from the vendors. Let's say that is around some 20,000. 20,000 worth of goods we purchased from the vendors, from multiple vendors, right? So here what is happening? So again, I'll just make it as a full statement. Let's say we have purchased stock from Reliance. So this is how the transactions are recorded, right? If you want to elaborate, this is how you will record. Let's say we have purchased multiple goods like maybe clothes or any footwear, digital products, multiple products from Reliance. This is for a reselling purpose, right? This is not for a business purpose. Let's say 20,000 worth of like wholesale you have purchased and you have to resell. So here, if you observe in this statement, purchase stock from the Reliance, and if you bifurcate each and every word, you will get to know what is happening in terms of cash. So purchased means you are receiving the goods. So for business, you were receiving 20,000 worth of goods. So 20,000 worth of goods is an asset only, right? Because this is something which is going to help, which is going to add your asset value. At the same time, if you look at here, nowhere I have mentioned that I have paid the amount to the Reliance. If I mentioned it as a paid to the amount, then the transaction will say that purchased stock from the Reliance by paying 10,000, 20,000. That means this is not a cash transaction. This is a credit transaction. Credit in the sense like maybe they have offered us like 10 days period of time or 20 days or something. Always remember whenever you see any transaction, right? Unless and until it is mentioned as a cash, purchased stock from Reliance by paying cash 20,000, then that is a cash and carry. You just visited the Reliance store and you paid some 20,000 hard cash and then you bought the 20,000 goods. So from your bank account, 20,000 has been reduced, but immediately your asset value has been increased 20,000 in different way. There are two assets, right? So even the stock is also asset only. So let's say you purchased one laptop for reselling purpose. So asset laptop is also an asset for you. So, or it might be say again we have different types of assets, right? So this is something like let's say that we will consider that as a stock. So we have received 20,000 rupees. Even if it is a one quantity, 10 quantity, 1,000 quantity, doesn't matter. In case if you are maintaining that or if you are purchasing it for reselling purpose, we will consider that always as a stock. So here, if you bifurcate the statement, right? So purchase happened for the stock and from the Reliance. Reliance is a vendor. So Reliance is something a vendor, right? So we are supposed to pay it back. So how do you bifurcate? And so even here also we are not paying the cash. And if you ask, so as initially I mentioned, right? If cash is not affecting here, then how will you record the transaction? but in terms of cash we will replace with the Reliance. That means we will show Reliance as a liability. So liability is something which we are supposed to pay after due date. Let's say Reliance has given up 10 days or 20 days, right? So you have to show it as a liability in your books of accounts. Let's say like these kind of transactions, like daily you will incur n number of such transactions. You will pay, you will keep on purchasing multiple products from different vendors, like uh, for from wholesalers, right? So like retail wholesalers will be there, digital products, lot of products will keep on purchasing. So every day some thousands of transactions will keep on recording. So how will you record? The first thing, first we have the end user. So end user is nothing but the like accountant, junior accountants will be there, right? For each and every company. If you visit any, if you take example of any company, right? So there will be junior accountant. So he has to record all these transactions. What happened with the stock? Either it is increasing or decreasing, and what is happening with the cash? Either it is increasing or decreasing, everything. So this is how the transactions has to be recorded. But how to record is something we will have to focus on the golden rules of accounting. So these three are examples where we just these are the very common used examples. So expense might be anything. You might be paying it for cleaning expenses, might be there, electricity expenses, lot of expenses you will incur, and a lot of different types of revenues will be there. Digital products revenue will be there, and any household products revenue, multiple sources of income will be there. So even in that case also, there are chances. Let's say you have sold some 10,000 rupees worth of products. Let's say you have sold this stock to Wipro for 25,000. So you purchased the stock from Reliance, that is around 20,000, and immediately you have sold it for Wipro for 25,000 by adding the margin. So even here also, if you observe the statement, I have not updated as a Wipro has paid to us. We have not updated as is received cash from the Wipro. It is just we sold. That means even this is also credit sales. So we will show this Wipro as a debtor. Debtor is nothing but like who we are supposed to receive amount from those debtors. Reliance is our creditor, right? So whenever you incur any expense and if you're not paid, then you are supposed to pay all creditors. Like you have n number of such creditors will be there in your books of accounts. It might be Reliance, or it might be, see, or even the vendors, outsiders, liabilities, any for any transaction where you have suppose if you're paying the amount, then we will consider those as a creditors. It might be vendors, or it might be bank, or it might be any, let's say if you received amount from like any investors, someone might like from your friend, he has given some 20,000 or 30,000, 50,000 as a capital. So even he is also a creditor only. And in terms of, and when it comes to debtors, right? So let's say this is the debtors is nothing but it is not necessary that you should have a customers. Let's say for example you are doing some uh interest, like let's say you have given some 10,000 for interest, right? So 10,000 you are supposed to receive from your customers, or like whomever you have given, right? So there they will consider those as a debtors. So debtor is nothing but we are supposed to receive the source from which you are supposed to receive the amount. Creditor is creditor will be the source where we have to pay the amount. So difference between debtor and creditor is debtor is our asset and creditor is a liability. But all this, like if you see, like some if you just visualize, there are a lot of such transactions are happening on daily basis, right? Like capital will be there, vendors, customers, electricity. Even electricity also we have supposed to pay electricity and cleaning expenses as a 5,000. So till now we have not paid. I've just recorded it as a electricity and cleaning expense 5,000. Even this is also creditor only. So now let us see how to record these transactions with the help of these golden rules of accounting. And before we get into the golden rules of accounting, so it has been categorized into three different categories. Okay, personal. So any transaction, right? So first we'll have to see whether the person is involved or not. So when I say person is involved, it might be human being or it might be any legal entity. So in our example, if you take it as a introduced capital. So introduced capital is like where the person is not involved. So we will see this transaction in the next one. We have something called as a real principal is there, and even nominal as well. And if you look at this purchase stock from the Reliance, so we are receiving the stock. Also, if you see, Reliance is a vendor, right? So Reliance is a vendor and it is a liability. So who is receiving the goods here? It is we are receiving the goods, right? And who is giving the goods? Reliance is giving the goods. So we will consider, maybe let's say instead of Reliance, let's say if you're purchasing some products from, the person name is Ram. So if you're purchasing products from the Ram, so he's a like he's a we'll consider this person as a like as a debtor, sorry, creditor. So this is a person who is giving us the goods, right? So we will credit Ram as a giver. If you look at and if you consider this also, instead of Wipro as a customer, I'll just give it as a some, let's say for example, we have sold the stock, entire stock to Ranjan. So let's say if this is a physical person, right? So that's why the person who is receiving the goods, we will debit that one. That means the receiver and giver. First, we should identify who is receiving and who is giving. In any transaction for that matter, first we should identify who is receiving and who is giving. So here in our example, who is receiving? It's we are receiving, and who is giving? Ram is giving. So in the next example, sold stock to Ranjan is right. Who is giving? Here Ranjan is receiving goods and giver is from our end. But we have two other principles. Then you will understand when to use this personal account and when to use the, we have something called as a real account, real principle as well. This is one principle, and we have a nominal principle. So remember, we have a three different principles of accounting. One is personal, and one is real, and one is nominal. In real principle, it says that, so it's better I'll write both three principles and then I'll explain, that will be easy. Well, so these are the three principles first you should consider whenever you are recording the transactions. So we have a three different principles: personal, real, and nominal. So when I say so if you look at these four transactions, right? So now it will be easy. So let's say for example introduced capital. So here what is happening in terms of cash? So we are receiving the cash, right? So I'll just make a record transaction here. So for introduce, let me just copy this one. So for this transaction, introduced capital, it's what is happening here? Cash we are receiving, right? And if you look at any of these principles, it says that whenever you receive something, see here we will see the person who is giving, and here if you observe, it says what comes in. What comes in? It comes in the sense for your within your business, what is that you are receiving? It might be stock, or it might be goods, or it might be products, anything for that matter. Let's say if you're purchasing car, debit what comes in, like what is it you are receiving. And at the same time, if you observe, there is one more transaction happened. Sold stock to Ranjan. From our business, what is going out? So it will be credited. It should be always credited, right? What is happening? The stock in this example is going to reduce. That means we are supposed to credit that one. In the previous example, stock we are receiving, what comes in, what is coming in into your business, that we will debit here. So we will see multiple transactions. Always remember what is happening with the cash. The first most important thing that you have to see is what is happening with the cash, and what is happening, what is it connected with the cash. We are just not giving cash, right, for this ram, or like we are not supposed to give ram just like 20,000. There should be something connected, right? So here, that we will see it as a stock is connected directly with the cash. So here, what is coming in, stock we are receiving, and what is going out from our business, cash is going out. That means we will update this, we will record this transaction, purchase it stock from ram as a stock account data to cash account. Stock account debtor 20,000 to what is happening with our cash or bank account, since we are not, and if you observe here, we have not paid any amount to the ram, right? So for that reason, I will update it as a ram account. Again, if you apply the same principle as per the personal, right, this there is something called as a personal principle. Here it says that the person who is giving us the product, it has to be credited. And if you look at, ram is someone who is giving us a product. That's the reason in this transaction, purchased stock from the ram. Ram is the someone who is giving us, so I have credited this one. See, this is very basic rule of accounting, but as and when we progress towards the core accounting, right, we will not consider this ram as a giver or something. We will, this is as per the accounts payable principle, and this is as per the account the liability. That's the reason we will show it as a credit. But this is for your understanding purpose. If you buy, if you divide this transaction, every transaction, first you have to see what is happening with the cash. So here cash is nowhere involved, but without cash we cannot do transactions. So instead of cash, we are supposed to record something, right? That we are going to record it as a ram, because ram is something, ram is a creditor, or he is a vendor to us. S- so if not today, like tomorrow we are supposed to pay, right? So that's the reason, who is giver here, ram, we have credited. And what is happening with the stock? And again, if you observe this principle, as per the real account principle, it says that whatever that is coming into your business, we have to debit. So stock is something which we are receiving. So I have debited this one as per the real account principle. Okay. And let's see what is happening with the sold stock to Ranjan. Even in this case also, we are not receiving any amount from the Ranjan. Ranjan is our customer, right? Again, we will see the same. What is happening here? Who is receiving the product? Ranjan account has to be debited. And what is happening with respect to stock? It is going out from our business. So whenever it says what is going out from your business, right, it has to be credited to stock account. So this is as per the same laptop. If you observe, initially we have debited and later we have credited. Why it has been credited? Because from our inventory, the stock is moving out. So whenever there is a reduce in the stock, it has to be credited. When I say if there is a reduce, it is going out. That means your asset value is going to reduce, right? So that's the reason. And to make it easy, this is something which we are most commonly used transaction in any of the business. If there is an increase, we'll have to debit and decrease. Whenever there is a decrease in the stock, we have to credit. It might be stock, it might be fixed asset, anything for that matter. Let's say if you purchased a car, so car we are receiving, right? So our asset value is going to increase. Our books of account in our books of accounts, our asset value is going to increase, right? So whenever there is an increase, it has to be debited. And now let us see one more transaction. So these two transactions are completed, right? So these are nowhere connected with the cash, but instead of cash, we are supposed to replace, right? Let's say if maybe after 1 month or 2 months, you have not recorded the name. I gave it as an account. That means every individual, uh, the item, right? We will consider in our books of account as an account. The stock is an account, RAM is an account, and then the capital is an account, cash is an account, building is an account, rent is an account. For every any item that is connected in the transaction, it connected to the cash, right? We will consider that as an account. So let's say if you're regularly purchasing products from the RAM, like multiple laptops and mobiles and all for reselling purpose. After 2 years, so maybe after 2 months or 3 months, if I ask you, if, like in case if your management wants to know what is the RAM account balance, like how much are we supposed to pay, or what is the amount that we have paid so far, we cannot you we can if you just record like this, it will be very difficult, right? For that reason only, we have to record all these transactions in an individual account. A RAM account, you'll the end user will keep on recording multiple such transactions. Stock account data, laptop account data, mobiles account data to RAM account. And later, maybe after 1 month, if there is a due date, we will see the balances what of the entire RAM account, and then we will pay it to the RAM account, right? So these we will call it as a journal entries. So whatever we have discussed, right? So this is we in order to record the business transactions, uh, as per the golden rules of accounting, we will call it as a journal entries. So it's a daily journal where you have to record all the transactions in this way. And if you look at the what is happening with the first transaction, right? That is the introduced capital. So here what is happening to our business, we are receiving the cash. So as per the real account principle, so what is happening? What comes in? Cash is coming into our bank account. So I'll give it as a cash. And then, so who is giving here, right? So as of now, we do not have any such. Let's say like you might have purchased, you might have received this 1 lakh from the bank account or anything. But still, okay. Let's say instead of capital, okay. So let's say 1 lakh we have received it from the SBI as a bank. Sorry, bank loan. So that is a capital, right? So either you can give it as a capital, like we can create a separate capital account, or in case if this is a bank loan, or if you are receiving the direct amount from the SBI, then you can replace it as a SBA. So capital account in general, this is used for a pool account, because capital, you might, let's say 1 lakh you have received from SBA, let's say if you have received some 2 lakh from ICICI, you have received multiple multiple amounts from different banks. So entire the all transactions related to this the capital, right? So we will use this a capital as a pool account. So that's the reason I have initially recorded as a introduced capital, but later this is for your understanding. It might be SBA, or it might be third party vendors, or it might be any, even if you are the owner of the company, let's say you can write it as your name itself. So there are multiple, let's say out of this 1 lakh, like 50,000 you have received from say SBA and 50,000 you have introduced. That means capital account consists of two sources of cash. One is from SBA, and one is from your personal account. So basically this capital, we will use it as a pool account. So what is happening here? Cash we are receiving, right? So cash accounted are to capital account. So capital account is always a liability. And even if you look at in this angle also, SBA is a giver, right? So the SBA is a giver, or it is a vendor for us. If not today, tomorrow we are supposed to pay. It is a creditor in general. So any liability, creditor, and vendor, all this, like in some or the other way, the impact will be it should be always credited. But if you look at from business point of view, we have to pay it back to the someone who has invested, right? This is a capital. So slowly you will keep on reducing the capital amount for your business purpose, in terms, like in terms you will convert the capital into profit by selling the products and all. So that's a different. So this is how we record the capital related transactions. Let's say like we have received some one more transaction, that is like 50,000 rupees. You purchased you have taken a loan from the SBA as a business loan. That's around 50,000. So how will you record this transaction? So here it is a pure hard cash. You can see the transaction. So we have already received 50,000 in our bank account from SBA. So we are receiving the cash. So as per the real account principle, or even if you look at the asset principle or the stock principle, any, like if you observe, this is a pure asset for us. So cash account, that is 50,000. And who is giving us? So cash account we have received as per the real account principle. This is an increase in the asset. So we have debited this 50,000. And against which one this has to be connected? We have received it from the SBA, right? So who is the giver here? Giver has to be credited. This is one principle. At the same time, if you look at in a different way, the SBA is a creditor, right? It's a liability for us. So even liability, whenever there is an increase in the liability, right, it should be always debited. The stock and liability, stock or asset, stock or asset, liability has to be, it is pure opposite. Whenever there is an increase in the asset, increase in the asset is a stock, it has to be debited. And whenever there is an increase in the liability, so we are supposed to pay this 50,000 to the vendor, that is, sorry, SB is a creditor, right? So it's a liability, it's a liability for us. So here there is an increase in the liability, right? So SB account, it has to be credited. So this is how each and every transaction has to be recorded in such a way so that you should connect the dots, like what is happening with the cash and what is happening with the how is it connected with the cash. There are two things that should remember: how the transaction has to be bifurcated in terms of cash. See, if you observe, these two are nowhere connected with the cash. These are the credit purchase and the credit sales, but still we are supposed to record those by connecting with the person who is delivering the goods or person who is receiving the goods. Person who is delivering the goods is a ram, is a vendor, and we have credited that one. So ram is also a liability account only. Here if you observe, right? So there is an increase in the ram account balance. Like on daily basis, if I keep on recording transactions like stock account like 5,000, 10,000 to ram, and it might be different vendors, these we will consider, these are the credit balances. So these we'll call it as a journal entries. So do you have any doubts here with respect to these journal entries? So remember this. This is like the most important, and this is going to help you a lot if you understand this one. Any statement like going forward throughout your accounting career or any financing related career, right? Just remember what is happening with the cash and see what is it connected. Okay, if it is connected, if it is whether it, first thing first we have to see what is happening with the cash, either it is a increasing in our books of accounts or there is a decrease. And if it is a decrease, how is it going to like connected? Like let's say if it is a payment or if it is a receiving, so what is happening? Accordingly, we have to record the transactions. So how to record these transactions and how not to record these transactions, we will see in the coming sessions. But in earlier, when these softwares and any Excel sheets or nothing, I mean, like very in the previous earlier days of in the initial stages of accounting, right? So a lot of them used to record the in a physical books. Even you might have seen in shops, they will have some ledger book. We'll call it as a ledger book. So in ledger book there will be something called as a debit, credit, and all. So slowly they have converted or they moved from using the physical books to the softwares like ERP or any tools and all. That's why we will still call it as a books of accounting. Like books of accounts is nothing but these are. So every transaction in any business they will record based on these principles only. So if you try to record like at least like 20, 30 transaction, different types of transactions, then you will get to know. Okay. So do you have any doubts here?
No, sir, nothing from my side.
Okay, guys. So we will continue in the coming session regarding. We will discuss more about more examples of the journal entries, and then we will see ledgers, and then we'll get into the tool. Okay, yes. Thank you so much for your time.
Thank you, sir.